Hey everyone, and welcome back to Talk Tickers. Today we're going deep on Illinois Tool Works.
ITW.
ITW, yeah, their latest earnings call.
They kind of fly under the radar,
They do.
but their Q4 results were really something else.
Yeah, they exceeded expectations in a lot of areas, which is pretty impressive with everything going on.
Absolutely.
So give us the big picture. What were the headline numbers we should know?
Well, revenue dipped slightly down 0.5%.
Okay.
But here's the thing. If you strip out the effects of their product line simplification strategy, it actually grew 0.4%. So that tells me the demand is still strong.
So it's not like people aren't buying their stuff. It's just strategic.
Yeah.
Interesting. What about profits, though? Did they manage to make any money?
Oh, they made money all right. Operating margin hit a record high of 26.2%.
Wow.
Which is a jump of 120 basis points thanks to their enterprise initiatives.
Okay.
And free cash flow up 10% with a conversion rate of 133%.
Hold on. Basis points enterprise initiatives. This is starting to sound a little like corporate bingo.
Yeah.
Can you break it down for the listeners at home who aren't finance wizards?
Sure. Basis points are basically just a fancy way of talking about percentages in smaller increments.
Okay.
So 120 basis point increase is like a 1.2% jump in their profit margin.
Got it. That makes more sense.
Yeah.
What about these enterprise initiatives, though? What are they doing to boost those margins?
It's all about continuous improvement, streamlining operations, negotiating better deals with suppliers, cutting out costs.
So like fine-tuning a machine to make it run better.
Yeah, exactly.
And it's working because those margins are impressive.
Yeah.
Their revenue growth wasn't amazing, though. Even after you take out the product line simplification.
Right.
How are they increasing profits so much when sales are basically flat?
That's where the strategic choices come into play. Remember that product line simplification thing? It's not just about cutting costs. It's about focusing on their most profitable products and ditching the ones that aren't pulling their weight.
So they're getting rid of the dead weight and letting the stars shine.
Yeah. And that brings us to another key strategy, customer-backed innovation, or CBI.
Okay, I've heard that term thrown around, but what does it actually mean in practice?
It's all about laser focus on what customers need.
Right.
They don't just come up with a product and hope it sells.
Right.
They deeply research what problems their customers are facing and then develop innovative solutions.
So it's like tailored innovation.
Yeah, custom fit for each customer's needs.
Wow.
And that focus is translating into some pretty impressive growth in their CBI-driven revenue.
Interesting.
They're aiming to achieve a 3% or more CBI yield by 2030, and they're well on track to hit that target.
So they're playing the long game here, and it seems to be working. Okay, so big picture, ITW is doing pretty well.
Yeah.
But I'm sure it's not all sunshine and rainbows.
Yeah.
What's the story within their different business segments?
Right. Let's get into the nitty-gritty.
Okay.
Their automotive OEM segment saw a 2% revenue decline.
Okay, not great.
Which isn't great, but they're still outperforming the industry overall.
So they're losing ground, but less ground than their competitors.
Exactly. And they expect that trend to continue in 2025, even with projected declines in overall car production.
Okay.
Plus, their operating margin for the full year jumped by 230 basis points, reaching 19%.
Not bad at all. What about their other segments?
Well, the food equipment segment was a real bright spot, serving up almost 3.5% organic growth.
Wow.
They've been making smart investments in this area, and it's clearly paying off.
Yeah, everyone's got to eat, right?
Yeah.
So it makes sense that this segment is thriving.
Yeah.
What else is going on?
Their test and measurement and electronics segment had been struggling, but finally saw a 2% uptick in organic growth, with electronics leading the charge. Remember how they invested in CBI during the downturn?
Yeah.
Well, it looks like those investments are starting to bear fruit.
It's like planting seeds during the drought, and now they're blooming.
Exactly.
What about their welding segment? Any sparks flying there?
Well, their organic revenue remained flat in Q4.
Okay.
Not exactly explosive growth, but considering they were in a 5-quarter decline, flat revenue is a sign of stabilization.
So they're stopping the bleeding, and that's a good first step.
Right.
What drove that shift?
Their new products, a lot of which are fueled by CBI, contributed over 3% to their growth.
So that customer-focused approach is making a real difference.
Yeah.
Okay, what about construction products? With interest rates going up, I imagine this segment might be feeling the pinch.
You're right, revenue was down 4% in Q4.
Okay.
But here's the thing, they're still outperforming a very tough market.
Wow.
New housing starts are down globally, so they're doing better than most.
So they're weathering the storm Better than expected.
And they're predicting flat revenue for 2025, which is pretty impressive given the expected slump in new housing starts in the U.S.
Okay, that's some seriously resilient performance. What about specialty products? Did they manage to specialize in anything profitable?
Well, they took a deliberate hit in this segment with organic revenue down 4%
Okay.
due to their product line simplification. But even with that planned decline, their operating margin hit a record high of 28.4%.
Wait, so they shrunk revenue, but profits went up?
Yeah, remember, it's not about selling more, it's about selling smarter. They strategically trimmed less profitable product lines.
Interesting. So they're like a sculptor chipping away the excess to reveal a more refined, profitable form.
Exactly.
Okay, we've covered a lot of ground here, but one thing keeps popping up, this customer-back innovation. It seems like it's the secret sauce to their success.
It's more than just a buzzword. It's baked into their DNA.
So tell me more about why it's so crucial for ITW.
It's about a deep understanding of their customers' needs and developing products that solve very specific problems.
So they're not just selling products, they're selling solutions.
Exactly, and the results speak for themselves. ITW has seen significant growth in CBI revenue, and it's contributing to their ability to consistently outpace the market.
It sounds like they're onto something really special here.
Yeah.
We've talked about CBI, we've talked about segments, but there's something else that's key to their success, their enterprise initiatives.
Yeah.
Can we dig into that a little more?
You bet. These initiatives are all about continuous improvement, always looking for ways to do things better, faster, more efficiently.
Yeah.
They're not tied to volume. So even in a challenging economic environment, they can contribute to margin expansion.
And they've got a pretty impressive track record with these initiatives, right?
Oh, yeah. For 11 years, running these initiatives have been a key driver of their success. Things like their 80/20 front-to-back methodology and their strategic sourcing programs are deeply embedded in their culture.
So it's not just a one-time thing, it's a way of life at ITW. They're constantly striving to improve and optimize, which, let's be honest, is pretty impressive in a world that often rewards complacency.
Exactly. Their success with these initiatives is a testament to their long-term vision and dedication to continuous improvement.
Yeah.
And here's the kicker. They see their product line simplification as an integral part of those enterprise initiatives.
Interesting. So it's all connected like a well-oiled machine.
Yeah.
They're streamlining their product portfolio to drive efficiencies throughout their operations.
Right.
It's a holistic approach.
You're absolutely right. It's a symphony of strategic decisions, and it seems to be playing a beautiful tune for ITW.
Well, they're definitely hitting all the right notes so far. But hold on, we've got a lot more to cover,
Yeah, we do.
including one of my favorite segments.
You're talking about our This Is Not Financial Advice segment, right?
You know it. But let's save that for part 2 of our ITW deep dive.
Sounds good.
We'll be back with that outrageous but plausible trade idea, plus more insights into what makes this company tick. Stay tuned.
Welcome back to Talk Tickers. Last we left off, we were about to dive into our This Is Not Financial Advice segment, ready to hear an outrageous but potentially brilliant trade idea inspired by ITW's solid performance.
Hit me with it. I'm all ears for some unconventional thinking.
Yeah.
What's this wild idea you've cooked up?
Okay, here it is. What if we consider a long-term AAP option strategy on ITW, betting on a significant price jump over the next 2 to 3 years?
LAP options. Those are the long-term ones, right? But ITW is known for steady growth, not massive price swings. Explain yourself.
That's the beauty of this play. LAPs give us time and leverage. We're not banking on a sudden spike. We're playing the long game, letting their steady performance CBI and those enterprise initiatives work their magic over time.
So instead of trying to time the market, we're giving ITW the runway to prove its worth. I like the sound of that. But wouldn't it be simpler to just buy the stock? Why mess around with options?
The leaps give us leverage, meaning we can control a larger position with less upfront cash. If ITW's stock price goes up, our potential gains are amplified. It's like using a lever to lift something heavier than you could with just your bare hands.
Okay, high risk, high reward, I get it. But what about the downside? Options can expire worthless, leaving us with nothing.
True, but that's where our analysis comes in. We've seen ITW consistently beat its markets, deliver strong margins, and generate solid cash flow. These are the building blocks for potential price appreciation. We're not just gambling, we're making an educated wager.
So we're using all those insights we gleaned from the earnings call to inform our bet. I'm starting to see the appeal. But for our listeners who might be new to options, can you walk us through how this Alip strategy would actually work?
Of course. Let's say ITW is currently trading around $300 a share.
Yeah.
We're feeling bullish on their future, so we buy call options with a strike price of, say, $350 and an expiration date 2 to 3 years out.
So we're essentially betting that ITW's stock price will be above $350 by the time those options expire.
You got it. If the stock price climbs above $350, our options are in the money. We can either exercise them to buy the shares at that lower strike price or sell the options for a profit.
And if the stock stays below $350,
Those options would expire worthless and we'd lose our initial investment. It's important to remember that options trading always carries risk and losses are possible.
a good reminder for everyone, this is not financial advice. Always do your own research, understand the risks, and talk to a financial advisor before making any moves with your money.
Absolutely. Now, back to our hypothetical trade. The beauty of LEIPs is they give us time. ITW doesn't need to make a sudden jump. Steady, consistent growth over a few years would be enough to make this strategy profitable.
So we're buying time and leverage with these LEAPs, letting our thesis play out without needing to time the market perfectly.
Precisely. And because LAPIs have a longer time horizon, they're less sensitive to those day-to-day market jitters. That can be a real advantage if we believe in ITW's long-term potential.
Okay, I'm seeing the logic here.
Yeah.
But those longer-term options probably cost a pretty penny, right?
They do have a higher premium than shorter-term options, but that's the price we pay for time and leverage. And don't forget, ITW has a long history of paying dividends. Those dividends can help offset the cost of holding those LEP options over time.
So we're not just relying on price appreciation. Those dividends act as a buffer while we wait for our bet to pay off.
Clever.
Not
But
bad.
I want to emphasize this is just a hypothetical trade idea, and it might not be right for every investor.
As always, everyone do your research, weigh the risks, and get professional advice before making any investment decisions. We're just here to explore possibilities and get those brain gears turning.
Right. Now let's step back from the speculative world of options for a moment and revisit why ITW is a company worth watching regardless of your trading strategy.
Sounds good. Let's remind our listeners what makes ITW such a compelling investment prospect. What are their key strengths?
Well, first off, their diversified business model gives them a real edge. They operate across a bunch of different industries: automotive, food equipment, welding, you name it. This makes them less vulnerable to downturns in any one sector.
So it's like a built-in safety net. If one part of the business is struggling, another might be booming, smoothing out their overall performance.
Precisely. This diversification makes them less susceptible to industry-specific shocks.
It's like a diversified investment portfolio, but at
Mm.
the company level. I like that analogy. What else is working in their favor?
Their focus on operational excellence is truly remarkable. We talked about those enterprise initiatives before, and those efforts are consistently driving margin expansion and making their operations leaner and meaner.
It's not just about growth, it's about profitable growth. They're masters at squeezing every ounce of value out of their business.
Exactly. And that discipline gives them a leg up on the competition, allowing them to weather economic storms and emerge even stronger.
And we can't forget their dedication to customer-backed innovation. It's more than just a trendy phrase, it's a core part of their DNA.
Absolutely. They're constantly trying to understand their customers' needs and developing innovative solutions to solve real problems. That customer-centric approach is driving growth and helping them win market share.
They're not just building products, they're building lasting relationships with their customers. Smart move.
Now let's talk about their financial strength. Their balance sheet is rock solid, their cash flow is consistently strong, and they have a long history of returning value to shareholders through dividends and buybacks.
They're the kind of company you want to own when things get turbulent.
Yeah.
They have the financial firepower to invest in growth, weather any storm, and keep their investors happy.
Precisely. Their financial stability gives them the flexibility to go after strategic acquisitions when the opportunity arises, like the MTS deal a few years back. That move has been a home run for them.
So they're not just sitting on a pile of cash. They're using it strategically to strengthen their position and create long-term value. And let's not forget their experienced management team. These folks have been at the helm for a while, they know the business inside and out, and they have a proven track record of success.
You're right. They've steered ITW through some choppy waters and come out on top each time. That kind of leadership gives investors confidence.
Okay, so we've got a diversified business, operational excellence, a commitment to innovation, strong financials, shareholder-friendly practices, and seasoned leadership. That paints a pretty compelling picture, wouldn't you say?
It does. ITW might not be the flashiest company out there, but they're a solid performer with a history of delivering, though. They're the kind of company you can buy and hold for the long haul.
They're like that reliable friend who always has your back, quietly getting things done year after year.
Love that analogy.
Yeah.
They might not be the life of the party, but they're definitely the ones you can always count on.
Well said. But before we wrap up this part of our deep dive, I've got one more question nagging at me.
I'm all ears. What's on your mind?
We've talked about their strengths, dissected their financials, and even brainstormed a daring trade idea. But every company has its weaknesses. What are the risks that investors should be aware of?
That's a great question, and it's an important one. ITW has a lot going for it, but there are some potential headwinds to consider. The most obvious one is the overall economic climate.
Right, we're living in uncertain times. Inflation is still a concern, interest rates are rising, and there's geopolitical tension simmering in the background.
Exactly. And these macro factors can definitely impact ITW's business, particularly in those more cyclical segments like automotive and construction.
So while they've proven they can outperform their markets, a severe economic downturn could still put a dent in their growth and profitability.
That's something investors need to keep an eye on. Another potential risk is competition. They're a global player, so they're constantly facing pressure from rivals both here and abroad.
It's a dog-eat-dog world out there, and they can't afford to rest on their laurels.
You said it. While their focus on innovation and customer relationships gives them an edge, they need to stay ahead of the curve and adapt to the ever-changing market dynamics.
So no time to get complacent.
Hmm.
What else should investors be watching out for?
Supply chain disruptions are another concern. The pandemic really exposed the fragility of global supply chains, and those issues haven't completely disappeared.
Right. Those supply chain snarls have been a major headache for a lot of businesses.
And while ITW has taken steps to mitigate these risks, like their produce where we sell, strategy disruptions to their supply chains could still impact their production and bottom line.
So that's something to monitor closely. What about those looming tariffs we discussed earlier? Are those still a threat?
They've expressed confidence in managing the potential impact, but it's still a wild card that could affect their costs and pricing.
Especially with so much uncertainty surrounding the whole tariff situation, it's definitely a factor investors need to watch.
Absolutely. And finally, while their product line simplification is generally a good thing, there's always a risk they could misjudge the market or overestimate the benefits.
So it's a balancing act. They need to be strategic about which products they cut and which ones they keep.
Exactly. It's crucial to remember that no investment is completely risk-free.
And as always, do your own research, understand the potential downsides, and talk to a financial advisor before making any investment decisions.
Well said. And with those words of caution, we'll wrap up this part of our deep dive.
Stay tuned for part 3, where we'll offer our final thoughts on ITW's future and some key takeaways for you to ponder. We'll be right back. Welcome back to Talk Tickers. We've covered a lot in our deep dive into Illinois Toolworks.
Yeah, we have their strong Q4 performance, their unique strategies,
Like CBI
like customer-back innovation.
and enterprise initiatives.
We even brainstormed a bold trade idea using LEP options.
We did, but we also took a hard look at the risks they face, because no investment is a sure thing.
Right, it's all about weighing those risks and rewards.
Exactly. So as we wrap up this episode, let's look ahead. What's next for ITW? What trends and opportunities could shape their future?
One of the most exciting trends is the digital transformation sweeping through the industrial sector. Think industrial Internet of Things, advanced analytics, artificial intelligence, all that cutting-edge stuff.
So the industrial world is going digital like everything else has.
Exactly. And ITW isn't just watching from the sidelines. They're actively embracing this revolution.
No.
They're investing in software, data analytics, and connected technologies to improve their products and streamline operations.
So it's not just about selling physical products anymore. It's about offering integrated solutions that combine hardware, software, and data.
You got it. And this shift towards digital opens up a ton of possibilities for ITW.
Like what?
They can use data to improve product performance, predict maintenance needs, optimize manufacturing, even invent new business models.
Wow. It's like taking their already impressive efficiency and giving it a turbo boost.
That's a great way to put it. They're already leaders in operational excellence, and their embrace of digital tech will only strengthen that.
Okay, so digital transformation is one big trend. What else is on the horizon?
Sustainability is another huge factor.
Makes sense.
Companies are facing more and more pressure to reduce their environmental impact.
Yeah, it's not just about profits anymore.
Right. It's about people and the planet, too. And this is where ITW's commitment to customer-back innovation really makes a difference.
How so?
They're developing products and solutions that help their customers save energy, reduce waste, and operate more efficiently.
So they're not just talking about sustainability, they're actually doing it.
Exactly. They're positioning themselves as leaders in providing sustainable solutions, which makes them more attractive to customers and investors.
Okay, digital transformation, sustainability, two powerful trends. But what about the overall economic picture? We talked earlier about all the uncertainty out there. How does ITW fit into all of that?
Yeah. Well, despite the uncertainty, there are still pockets of growth and opportunity, and ITW is well positioned to capitalize on them. One area with a lot of potential is in emerging markets.
Right. Those are the economies that are growing faster than developed markets.
Exactly. And they already have a strong presence in China, which is a major growth engine for industrial companies.
Right. They've talked about their success in China, especially in their automotive segment.
And they're continuing to invest in emerging markets, expanding their reach, tailoring their products to local needs.
So they're not just waiting for growth to come to them, they're going after it.
Precisely. Their global reach and ability to adapt gives them a real advantage in capturing those emerging market opportunities.
Okay, we've covered a lot. Let's bring it all together.
Yeah.
What are the key takeaways for our listeners?
First, ITW is built for consistent performance. They've got a diverse business model, a laser focus on efficiency, and a commitment to innovation that drives growth.
They might not be the flashiest company, but they're the kind of steady performer that can deliver solid returns over time.
They've also shown they can adapt from navigating supply chain disruptions to embracing digital transformation and making sustainability a core part of their strategy.
Yeah, it's like they're not just reacting to change, they're anticipating it.
Exactly. And their strong financials, their dedication to shareholder value, and their experienced leadership team give investors confidence.
So while there are always risks, ITW seems like a company worth considering.
Yeah, for investors looking for stability and growth potential.
As always, we encourage our listeners to do their own research.
Absolutely. Understand the risks and consult with a financial advisor.
Well said. And that wraps up our deep dive into Illinois Toolworks.
Thanks for joining us on Talk Tickers.
We'll be back soon with more earnings call breakdowns and maybe a few more outrageous trade ideas. Until then, happy investing, everyone.